Starting on a project for a customer can be risky without securing a deposit. You're buying supplies, creating a custom product, or reserving time that takes you off the market for other customers. Requiring a deposit ensures a customer is committed and protects your time and income if they cancel last minute or are a no-show. For our example, let's step inside the world of professional wedding photography where deposits are an industry standard. After all, once a date and time is booked, the photographer is unavailable to other customers. The photographer charges $4,000 for the wedding package. A non-refundable deposit of $800 is required to lock in the date, with the remaining $3,200 due 2 weeks before the wedding. And here's the part that a lot of business owners misunderstand. A deposit is not income, not yet. The photographer still owes a service, so the deposit is considered a liability until the wedding actually happens. We're going to start by creating a new account for the deposits. To create a new account, we'll go to All Apps and then Accounting and Chart of Accounts. And then we'll click on New Account. And the new account name will be Deferred Revenue. The account type will be Other Current Liabilities, and the detail type will be Deferred Revenue, and then we'll save. If your business has non-refundable deposits or issues partial refunds, you will also need to create an other income account called Forfeited Deposits. The account name will be Forfeited Deposits, and the account type will be Other Income, and the detail type will be Other Miscellaneous Income, and then we'll save. Next, we'll create a new service item called Customer Deposits and link it to the liability account that we just created. To create a new service item, we'll click on the gear icon and then click on Products and Services, then the New button, and this will be a service. The name will be Customer Deposits, and we can use the same name in the description. And we're going to link it to the new account that we created for our liabilities, which is Deferred Revenue, and then save and close. If your business has non-refundable deposits or issues partial refunds, you will also need to create a new service item called Forfeited Deposits, which will be linked to the income account by the same name. The name of this item will be Forfeited Deposits. And I'm going to copy this name and paste it in the description section, and we're going to link it to the income account that we created called Forfeited Deposits, and then save and close. The couple paid their $800 deposit to book the photographer. Because they're paying up front, we'll create a sales receipt. To create a sales receipt, we'll click on Create and then Sales Receipt. And the customers are Jennifer and Kevin Yang. The date of the sales receipt is December 2nd. They paid using cash and it was deposited into the Chase checking account. And we're using the service item Customer Deposits, and they paid a total of $800, and then we'll save and close. When we take a look at the balance sheet for the month of December and we scroll down a bit, we can see their $800 deposit, which is listed as an other current liability under deferred revenue. Now that the deposit is recorded, let's create an invoice for the wedding package. We'll click on Create and then Invoice. Our customers are Jennifer and Kevin Yang. The invoice date is December 2nd. We're going to clear the terms because they actually have to pay 2 weeks before their wedding date. So that's going to be December 15th. And the service item is the wedding package for a total of $4,000. And then we'll save and close. There are 2 ways to apply the deposit. Add it directly to the invoice or use a credit memo. First, let's apply it directly to the invoice. Let's head over to their account. So I'm going to click on All Apps and then Customer Hub and Customers. And here we have Jennifer and Kevin Yang. And under Transaction List, we have the newly created invoice. I'm going to open it by clicking on View and Edit. To apply the deposit, I'm going to select that item, Customer Deposits, and this is going to be entered as a negative number, negative $800. And here we can see the new invoice total is $3,200 after the deposit has been applied, and then we'll save and close. The second approach is to use a credit memo. Before creating it, I like to turn off Automatically Apply Credit so QuickBooks doesn't apply it to the wrong invoice. By default, credits are applied to the oldest open invoice. We'll click on the gear icon and then click on Account and Settings. and then we'll go down to advanced, and then scroll down to automation. Then we'll click on edit, and we're going to turn off automatically apply credits, and then save, and done. Now we'll create the credit memo for $800 using the service customer deposits. We'll click on the drop-down arrow and select credit memo, and this is dated December 2nd. The product service will be customer deposits, and this will be for $800, and then we'll save and close. To apply the credit memo to the open invoice, we'll click on receive payment, and we're not adding any additional funds, so I'm going to zero that out. We're going to select the invoice, and we're going to change this to $800 because that's the amount of the deposit that we're applying to the open invoice. And then we're using the existing credit memo of $800, and then we'll record and close. Here we can see that the credit memo for $800 has been applied, and the open invoice amount is now $3,200. What happens if the wedding is canceled? Unfortunately, this does happen. The couple cancels, but the deposit is non-refundable, so the photographer keeps the $800. Now we need to move the money from a liability to income. If you apply the deposit to the invoice, then you'll open it by clicking View and Edit, and then you'll delete the line item for customer deposits, and then save and close. Now the open balance is showing $4,000. If you applied the deposit to a credit memo, you'll click on View Edit, and then More, and then Void, and then click on Void Credit Memo. Now we can see that the open balance is again $4,000. Then we'll create a journal entry to move the $800 to our income account. So we'll click on Create and then Journal Entry. And this will be dated December 12th. We're going to move the fund from deferred revenue or liability account. So we're going to debit this $800 and we're going to connect it with the customers, Jennifer and Kevin Yang, and we're moving the funds to our forfeited deposits account for $800, and again we're going to use the customer names, and then we'll save and close. We'll keep the sales receipt because it records when the deposit was initially received. However, since the wedding package was canceled, we'll void the original $4,000 invoice. So we'll click on View Edit, and then click on More Actions and Void. Yes, we want to void the invoice. Voiding it keeps a record for auditing purposes, but changes the amount to 0, as you can see here. We'll take a look at the balance sheet for December, and we're going to scroll down, and here we can see that the liability account deferred revenue has been zeroed out, and the profit and loss statement is showing other income as $800 under forfeited deposits. Let's say that the photographer refunded 50% of the deposit. We'll click on Create and then Refund Receipt, and this will be for our customers, Jennifer and Kevin. On December 12th, we're using cash to repay them from the Chase checking account, and we're not using a check, so we're going to delete that section, and the service will be customer deposits, and we're going to refund half of the deposit, so $400, and then we'll save and close. Then we'll use a journal entry to remove the remaining amount, $400, to our income account, so we'll click on Create and then Journal Entry. This will be dated December 12th, and we're moving the funds from the deferred revenue account in the amount of $400, and we'll use the customer names, Jennifer and Kevin, and we're moving the funds to the forfeited deposits account for $400, and again, we'll use the customer names and then save and close. Next, we'll void the open invoice, so we'll click on View Edit, and then click on More Actions and Void. Now when we take a look at our balance sheet, we're going to scroll down again, and here we can see that deferred revenue has been zeroed out. And our profit and loss statement is showing the 50% of the deposit, which we kept as other income. Everything we've done so far applies to accrual accounting. If you use cash basis accounting, meaning income is recognized as soon as it is received, the workflow is simpler. You'll create a customer deposit service item that is mapped to an income account, which you'll use on the sales receipt. Then on the invoice, you'll apply the customer deposit as a negative number to reduce the final amount due. Job deposits protect your time and prevent lost income. Now you know how to set up customer deposits, record them correctly, apply them to invoices or credit memos, and handle cancellations and refunds.